Good day, trader, and welcome to the webinar for the week. So today's webinar is called Thank You China because China has just injected $31 billion into its economy, and the JSE took it quite positively. So we can look at the top 40 CFD, and you can see that over the last couple of days, the JSE has dropped from 52,516 down to 49,935. And then with the injection in China, you can see that the market has tried to recover a little bit. And what's important is this little candle here. So I did a webinar a few weeks ago where I spoke about the sword formation and how the market went up, and now it's made another one. And previously it made another sword formation. So every time it makes this formation, the market goes up, and this is good for us. Because we go long when the market is going up. This is the main market that I use for looking at our trades. So what we can expect is we can say that this is an inverse head and shoulders, and once it breaks 52,621 level and it breaks above, this will be a bullish signal that we can expect a lot of upside to come, starting at the first target of 55,076. Okay, if it does that, then we'll be banking quite a number of longs. So let's go on to the trades that we held. So CFR, remember Richemont, I told you was going to have its pullback, and it had its pullback, and it pulled back all the way to the point that we got stopped out. All right, so all hope is not lost. It's still, I'm watching this level quite carefully, the support level. If I can draw it for you here, you can see that I'm watching the support level very carefully. I know it broke below, which is why we got out, which is the safe side. But once it breaks above, we will make up for the small losses. So you should be out of your trade with Richemont at the moment. Okay. Same with Exxaro. Exxaro had a very bad pullback. The trade wars all over the world is really taking into effect, even in South Africa, where Trump's imposed a $200 billion additional tariff hike in China, okay, which is not good for resources here in South Africa. And obviously we've seen the Rand weaken in the past couple of days, and normally there is a correlation where the Rand weakens and resources goes up, and now we are at that point where there is no correlation between that, so we cannot use that as a catalyst. So what I am watching with Exxaro is that there is this potential formation forming, which is a cup and handle, and once it breaks above, I'll be more positive to go long and we can profit from it. So you should obviously be out of your trade of Exxaro for a small loss. So now let's talk about what is there potentially to buy. So the first thing I'm looking at is Pick n Pay. Pick n Pay is forming this box formation, or even you can say a W formation, which once it breaks above 79.09 and closes above, it would be a high probability trade that will go long. And you can see that when it broke out of this resistance, the market flew up. And now if it breaks out of this resistance, we expect the market to do the same. So this is, at the moment, it's nearly time to buy. Not just yet. It could come Monday, Tuesday. I'm not sure. The market needs to react positively and carry on moving up. So there's a retail stock that we could potentially get into next week. Then we've got Sasol, which I did see a potential buy mark at this level. You can see it's broken below the support, but what I've noticed in the last couple of days is that these supports are not sustained. Once they break below, the new resistance is not sustained, because these are the points where they get traders out and hits their stop loss, and then the market runs up. So I'm not going to buy immediately below here because we're going against the trend. What I will do is wait for a reversal pattern, and then once the market breaks above 495 or so, that's where we will get a high probability trade to go long. Okay, so lots is going on. What I need to mention is that because the market has been very sideways for the last couple of months, I'm changing the strategy a little bit. Not anything new that I haven't done before, but all I'm going to be doing is increasing the leeway between the stop loss and increasing the leeway to the take profit, so that we can let the market recover, pull back a little bit. And even though the percentage gains will be higher and lower for the loss, from 30% to say 50, 60, 70%, remember you can manage your money. So what is very important is during these sideways times, make sure you're only risking around 1 to 2% maximum. Okay, this is very important. Maximum, that's what you should be risking, so that if we go through a losing streak of 7 or 8 trades, you're only down 8% of your portfolio, not taking into account of compounding, which is less. So think about these things. Trading needs to be easy flowing way to generate income, and just think of the bigger picture, the medium to long term. I know short term is that we get into the trades and we get out within 2 weeks, but those 2 weeks is not just going to make is not going to make you a substantial income. What is going to make you substantial income is that we keep getting into these short trades, in and out and in and out, and slowly but surely the market and the portfolio, the equity curve and the portfolio value will go up gradually. All right, this is the realities of trading, and I don't want to mislead you into the false pretenses of what trading is about. So I hope you've got some food for thought. You've got some ideas of we're going to be trading next week, and hope you stay tuned for the next webinar. Have a fantastic weekend.